Let's now solve question 6A from our May 2025 examination paper of CA Intermediate. 6A has two options. You can either write this theory question on accounting standard, or you add an option to solve a practical one, that is on accounting standard 28 impairment. Talking about the first part, the question asked us what are accounting standards, and you're also expected to explain the objectives of accounting standards and also the advantages of setting these accounting standards. So, what are accounting standards? Accounting standards are written policy documents, and these accounting standards are issued by either government, expert accounting body, or other regulatory body. The objectives of issuing these accounting standards are to be discussed later, but when government, expert accounting body, or other regulatory body issues accounting standards, they would have to cover the aspects of recognition, measurement, presentation, and disclosure. So, in short, accounting standards are written policy documents issued by government, expert accounting body, or other regulatory body covering the aspects of recognition, measurement, presentation, and disclosure. If not for accounting standards, there are multiple accounting policies available, multiple accounting practices that can be followed for the same situation by an entity. When you have various options to follow, there is no standardization, there is no uniformity, there is no reliability, there is no comparison. So, the objectives of the accounting standards is to bring in standardization in the accounting practices that we follow, is to bring in uniformity, is to increase the reliability of the accounting records, and also to bring in comparability. This is the short and sweet answer that was supposed to be written for that 4-marker first option, 6A. If in case you choose to write 6A, the second option, which is on impairment, let's discuss. Shall we? See this. A machine was acquired by Zest Limited on 1st of April 2019 for rupees 60 lakhs. So 60 lakhs is purchase price on 1st of April 2019. It had useful life of 6 years. This will help us in determining depreciation. The machine is depreciated on SLM basis and does not carry any residual value. Please do 60 lakh divided by 6. 10 lakh is the depreciation per year. Out of 60 lakhs, when you deduct depreciation of 10 lakhs for each year, the asset will go on reducing by 10 lakh. Let's see when are they planning to check for impairment. On 1st of April 2022. So, we would have to depreciate till 1st of April 2022. Count the year. 1920, 2021, 21, 22. 3 years depreciation has to be deducted. So, 60 lakh divided by 6 is 10 lakh rupees as depreciation per year. For 3 years, depreciation will be 30 lakh. Deduct 30 lakh from 60 lakh. 30 lakh will be the value of the asset. The carrying amount of the machinery was reassessed to be 36. Oh, they did not do impairment. They revalued the asset to 36. Out of 60 lakh, every year if you charge 10,000, 10 lakh depreciation, and if you do it for 3 years, the carrying amount will be 60 minus 30, 30 lakh. On that date, we reassess the value to be 36. If the 30 lakh worth of asset is reassessed to 36, can I say we're doing upward revaluation by 6 lakh? Let me do that. Observe, the asset was initially purchased on 1/4/2019 for price of 60 lakh. I will depreciate it not for 1 year, but I'll do it for 3 years. So 60 lakh divided by 6 into 3, depreciation will be 30 lakhs. And the book value of the asset will become 30 lakhs as on 1st of April 2022. They've reassessed this and the revised carrying amount became 36 lakh. For 30 lakh to become 36 lakh, can I say there is upward revaluation of 6 lakhs? What is happening after this? Then see, out of 6, 3 years is over. What is the remaining useful life? 3. Remaining useful life is 3. And it has to be depreciated over remaining 3 years unless they give new period. Surplus arising out of revaluation being credited to revaluation reserve. That's obvious, no? Whenever we revalue the asset upward, where do we write it to? Revaluation reserve. Accounting standard tells us to do this. Then, for the year ended 31st of March 2024, oh, we're right now on 1st of April 22. We're talking about year ending 31st of March 2024. So, if we're talking about 24 end, 22, 23, 23, 24, 2 years would have to depreciate. Shall I depreciate for 2 years? Help me depreciate it for 2 years. 2 years depreciation will be 36 lakh has to be depreciated over 3 years. Because total useful life was 6. In that 3 is over. How much is remaining? 3. So divide it by 3. 12 lakh into 2. Can I say 24 lakh is the depreciation? and the value of the asset on 31st of March 2024 is 12 lakh. Did everyone understand this? This revaluation reserve 6 lakh, I have two options of treatment. Number one, 6 lakh can be deferred and charged to P&L every year. In what pattern? In the pattern of depreciation. Same amount. 6 lakh divided by 3. 2 lakh should be transferred to P&L every year. First option. Second option, I can keep full 6 lakh in reserves and surplus just like that till the date the asset is sold. On the date of sale, I'll de-recognize this 6 lakh. I have this option. These two options are given to me by AS 10. Sir, why is this important? I'll tell you. We've discussed this in the class on impairment. What should be the treatment of impairment loss? Impairment loss should be reduced from the cost of the asset and impairment loss should be charged to P&L. I'll repeat. Impairment loss should be reduced from the cost of the asset and impairment loss should be charged to P&L. We did couple of AQs in detail to understand how would this be treated if there is goodwill and revaluation reserve. Before you load impairment loss to P&L, who comes in between? Revaluation reserve. So in order to shoot a bullet to P&L, I should shoot it through. Very good. Before I shoot impairment loss to that respective asset, goodwill will come in between. So after killing goodwill, I can kill the asset. After killing revaluation reserve, I can kill P&L. So if in case there is impairment loss, you will reduce it from the asset. But should it be charged to P&L? No. We should first neutralize. We should first decrease the cost, reduce the write off that revaluation reserve. Only after we write off revaluation reserve, we can write it to P&L. I hope everyone understood this. Yeah, don't make fun of what's happening around. It is not joke. You're playing with conditions indicating an impairment of an existing machine. Amount recoverable retained to be ascertained to be how much? Oh, see, carrying amount is 12 lakh. And how much is the recoverable amount? See, they have not given us net selling price, value in use, all of that. How much is recoverable amount? Out of 12 lakh, only 9 lakh can be recovered. Can I say 3 lakh is impairment loss? Yeah, simple. Yeah. So the journal entry will be impairment loss will be debited, asset will be credited by 3 lakh. This is happening on the 31st of March 2024. Actually, I would write the entry P&L account debit to impairment loss. Am I right? 3 lakh. But before I write to P&L, I should adjust it against revaluation reserve. Only after I completely make my revaluation reserve 0, then I can go to P&L. Am I right? We had revaluation reserve of 6 lakh here. But we have an option. We can either transfer it to P&L account over the remaining useful life or we can write it on derecognition. What is the entity choosing to do? If they tell, we'll take what they tell. If they don't tell, I can make my assumption. You are required to calculate loss of impairment then on the machine. Loss on impairment of the machine. Show how this loss will be treated in the books. For that, you should give me some information. The company had followed the policy of writing down the revaluation surplus by the increased charge of depreciation resulting from revaluation. When you revalue the asset upward, asset price went up. Before revaluation, whatever price of the asset was there, that should have been depreciated. When you increase the depreciation will happen, no? To decrease that, they're transferring revaluation reserve to PL. Basically, they're writing revaluation reserve to P&L every year, little. I'll explain it to you. See, before this revaluation, cost of the asset was 60 lakh to be depreciated over 6 years. How much is depreciation for each year? 10 lakh. Now, after 3 years, 30 lakh being depreciated, remaining value of the machine is 30 to be depreciated over 3 years. How much? 10 lakh each year. Now, you revalued the asset to 36. You revalued the asset upward by 6, making it 36. When the asset becomes 36, depreciation will become how much? 36 by 3, 12. Every year increase in depreciation is how much? 2. Previously, before revaluation, depreciation would have been 10. Now, after revaluation, depreciation has become 12. 2 lakh will be additionally charged as expense. That will be compensated or neutralized, as you say, by transferring that 6 lakh revaluation reserve to P&L over those 3 years as 2 lakh every year. In other way, how much is revaluation reserve? What is the pattern of depreciation? Straight line. What is the pattern of depreciation? Straight line. Equal amount every year. Remaining useful life. Divide 6 lakh by 3. Transfer 2 lakh to P&L every year. That's not they're telling. They're telling increase the depreciation. ST to depreciation 10 lakh per year. STI to depreciation 12 lakh per year. Increase is 2 lakh. That 2 lakh should be transferred from reserve. Basically, what did they do? They had reserve like this. On 1/4/2022, they've revalued the asset upward 6 lakh. We are doing this impairment test on what date? 31st of March 2024. 2 years, no. Am I right? 6 lakh divided by 3 into 2, 4 lakh they've already transferred to P&L. How much is balance remaining in that ledger? 2 lakh. Now, I have impairment loss with me. How much impairment loss loaded in my gun? 3 lakhs. I have 3 bullets. I am trying to shoot P&L. Before I shoot P&L, 3 lakhs. Who's coming in between? Yeah, revaluation reserve will come like, shoot me. With touching me, you can't go touch that. If you have to touch P&L, you would have to kill me first. I'm like, how many lives do you have? 2 lives. I have 3 bullets. ಎರಡನಿಂಗೆ one downಗೆ. So I will shoot 2 bullets to revaluation reserve. Debit. I still have 1. I'll write it to P&L. There are no questions on this revaluation reserve and P&L adjustment in the in our ICA study material. But when we did AQs, if you remember on accounting standard 28, we have clearly covered this treatment. See, adjustment with revaluation reserve charge to P&L. We have done similar questions in the class when we've done this. Same with our goodwill if it is there as well. So, if in case you have done AQs, this question in the examination was definitely not a difficult one.